Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your metals market update for this Monday, July 10th, 2017, just getting on to 2 p.m. Central Daylight Time. Well, we're going to have an up day in the metals for a change. Now, it's interesting because Fed Chair Yellen's going to speak before Congress this week. We've got the Bank of Canada. They're probably going to raise interest rates, their central bank right now. Wednesday's the anticipated date. That's the first time in, I think, 7 years that they'll have done that. And, of course, we've just got the general economic data that's going to be coming out. Stocks are quiet. There has not been much action in them at all. Your metals came alive today. They came well off the lows. And, by the way, that fat finger break that occurred last week that I was talking about, the CME, the Chicago Mercantile Exchange, did cancel a bunch of trades under 1554 in the SEP contract. So they were all wiped out. I think the market got as low as 1432, and those were all broken. And I want to applaud them. You get these crazy trades. That's the type of stuff the exchanges have to do. I was very negative on them, and I think they did the right move. They should have done that on other flash crashes, but more important, there's got to be safeguards in here. It throws the charts off, it throws the action off. As a trader, you wake up and you go, what the heck happened? It's very, very difficult, and I can't imagine that it's all that hard to stop. With all their resources, there should be a way to prevent all that from occurring. But in any case, let's go to the chart action and see what's going on. You know, when I wrote a gold report a couple weeks ago, I was talking on the weekly and monthly charts about the 18-day average. There had been a pattern of an uptrend. It broke it. No question it broke it. The question is which way down and where's the big next move? All that this market has done so far, and I want to make this clear on the weekly chart, you had this big up move right here. You pulled back here. You went up. You pulled back to the 18-day average. You got back and you formed a double top. You see that in the 1295 level. You've now pulled down and you're trying to bottom again in the 1200 level. We've been here. We've done that. We have a $95 trading range approximately. Back and forth on either side, and will you break away from it? Right now, if you got to give somebody a nod, it's certainly the bears. The markets are well under the 18-day average. On a closing basis, you have a very clear pattern of lower highs and lower lows on just closing basis, downtrend. When we come to a chart, a bar chart, you can see the slope of the market down. And when I put on my swing line, which I think all traders should always be looking at, you've got a pattern of lower highs, lower lows. The key number here to negate the downtrend, that will not start an uptrend, but it would negate the downtrend, is taking out 1229.50. When I take a look at the momentum, I applaud the market in this sense. We had, take a look right here, look at these two numbers. The red number, the 18-day average of closes, is underneath the 100. Next day it gets under. For my work to be valid, the market should be making lower lows after that for a new low. Market bounces instead, and I know I was here saying, you know, we've had a bearish crossover, maybe I'm wrong. Bingo, I wasn't wrong. Now you're down there, and you made the lowest low of the move starting today. So that part has been completed. It doesn't mean it can't go lower, but it's accomplished what the technical part calls for. What else? It also means that you've got resistance in two levels now above you, the 100-day and the 18. Where did the market stop? Well, it's riding current tense, riding the lower Bollinger Band. It's trying not to stay under it. It keeps slipping to new lows, and you have that embedded reading. There's nothing friendly there. When we come to the ETF GLD, you can see you've got the embedded reading. It's the same pattern, the same crossover, and the market goes down. In GDX, which is the gold miners, a little different event is happening. Market number one is still open. If you take out 2170, what happens is you'll have an outside day up today. If you don't, you could have a trading range that negates the downtrend by taking out 2170. You're not embedding, you're just oversold. You've hit downside targets. Not if I'm right. If the market wants to go back to a neutral stance, it should move to 2201, and we'll see what goes on. I think a time that I show the gold-silver ratio, and I'm going to step back here and off camera, just a fraction for you. You can see that back in March of 2016, all the way on your left, at 82.54 was a peak. You then dropped down after that into July, made your lows under 66, played around into the 72 level, broke back, and then you came from that low through here and you began an assault to the upside. Then you started another pattern of lower highs, lower lows, and since then it's been straight up since the end of May, where the market just keeps going to the upside on a closing basis. Each one of these low settlements did not take out a previous low settlement. So I consider that pretty bullish still for the gold over the silver. In the silver, look at how the market is down. Now the Bollinger Band is at 1555.5. You slid through that down to 1514.5 and right back up today to 1563. And one of the reasons that often happens is when you get those fat finger days, and if they make an adjustment, the market likes to see what's under the market. Maybe they can really cause where that low went. And in this case, it's so far a failure. Now, the big question will be, can you lose the embedded reading? If you lose that tomorrow, then you've got a shot at getting back up to that 18-day average if you can get 2 days in a row where it's lost. In the copper market, all that you did is fall back to support at the 18 and the 100-day average of closes. Remember, the red is the 18, the green is the 100. Momentum is still pointing down, but the market's got it's in no hurry to get under those averages, which tells me this must be a value area temporarily. So it's something to keep your eyes on. You've had a nice correction from this high all the way back down. So you got up over the 270, 273 level right in that zone, and you've slid back now 10 cents, and you're finding some support. In the platinum market, you're still very much in a downtrend. You're riding the lower Bollinger Band. You hit it, you bounce away, you come back to it, and you have an embedded reading. Everything there is still bearish. And in the palladium market, you've got a market that's been in a downtrend, lower highs, lower lows for a long time. It's hit several days now, the lower Bollinger Band, and bouncing away. All of the metals should be looked at if you lose the embedded reading. If you lose them, then you might want to get to the point where you're saying, aha, maybe we've seen a low on this reaction and it's over. In the dollar index, interesting day. The dollar index got higher than it did on Friday, and right now it's back up a fraction, if you will. Let's see where it settles. If the market settles lower, or it really doesn't have to, but ideally if you took out 95.52, you're back in a downtrend. Let's talk if it doesn't do that. You've got to take out 96.22.5 to negate the downtrend, and then you're right into the 18-day average of closes. In addition, what makes this trade bad from both perspectives is that you can't get bullish right away, and you're oversold, so it's hard to get bearish the market, a difficult one to call. So that's what I'm seeing in the metal markets today. You know, what about when you want to day trade in these markets? What if you're, looking at, sometimes you put on a day trade late in the day and it doesn't complete itself where you want. Well, pivot points are a very popular tool to use for that in and out trading. Let me tell you another thing to use. Let's assume you're trying to get into the market and your buy areas or your sell areas aren't being hit on a regular chart. Once you put on these pivot points, it gets very exciting because it gives you another way to look at the market. All that this is you take a look at yesterday's high, low, close. There's a formula where you're adding and subtracting together to come up with 5 lines. You're going to have a white center line. On that white center line, you're going to get 2 numbers above it to sell into, 2 below it, like the 2 blues here, to buy into. And the goal is if you buy the second blue, can you get out at the first blue? If you buy the first blue, can you get out at the white line? And then you flip it to the sell numbers trying to come back down. There's also a blowout where you just say, hey, this isn't working, and how do I come out of all that? I've put it together, 2 videos to help you learn this. It's been around a long time, but for most traders, they don't know, and they don't realize the simplicity of doing it. All of our charting software carries this study in it, and it's easy to set up, by the way. But I like my traders to learn the formulas, and then after that, believe me, they're going to forget them. They're just going to pay attention to the buy and sell, and you can even put oscillators on this. You're going to give us a call, 866-973-2077. From there, we're going to send you out both videos by email, anything else that you need to work with it. And we have pros here that do this all day long, so they can really help you with these lines, these buy and sell formations. Again, this is for shorter term traders. You can also click right up here if you're watching me on YouTube. Underneath us, of course, you can click on the form that says click here for Ira's free offer if you're on a website that's carrying this video. And you can always go to our website at www.iraepstein.com. Simply look at our carousel of free offers. It'll be there. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.